Hey, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, before we head into the weekend, I want to give you all a real quick update on the levels that we pay attention to here at CYPRX, utilizing our institutional software, going over dark pools and deltas on both XRP and Canton, being one of the only communities available to retail investors that give you all accurate level-to-level updates on major layer ones in the digital asset ecosystem. Hopefully you all have enjoyed those accurate updates. We're going to be discussing and talking about the fundamental backdrop, taking a look back at the beginning of the week, what we were discussing and talking about as the possibilities, and as the fundamentals continue to unfold throughout the week. And then fast forward to today, take a look at where we're at in the current landscape, why the market sentiment is still leaning risk off. And then towards the end of today's video breakdown, stick around. I want to play some video clips from individual representatives that worked at BlackRock for many, many years, I believe over 2 decades, if I'm not mistaken, from the Injective Summit that took place live from Washington, D.C. just a couple days ago, playing some very interesting video clips that I feel like will set the tone to get everybody's mindset right, considering the current environment that we're operating in with this risk-off backdrop, but looking at it in the lights of an opportunity instead of a fear-based environment. All right, so starting off here, we're going to go back to July 14th, 2026. I like timestamps. This is not to say we told you so. This is just to show you guys that you have individuals, CYPRX community here, whether it's myself or other mentors in the community that put out real valuable information when it matters most to keep you all level-headed, no hopium, no over-optimistic perspectives or outlooks, and just really keeping you all dialed in with what's happening in the space. So we had over throughout this week, CPI, PPI data. We had Fed Chairman Warsh testifying in front of Congress both Tuesday and Wednesday. We had core retail sales, Philly Fed manufacturing index figures, and unemployment claims, along with a presidential speech from Donald Trump just yesterday. And then today we had consumer sentiment, inflation expectations that all shaped market sentiment on top of Middle East tensions. We also had AI-related backdrop things happening in the stock market that obviously, of course, weighed on market sentiment. The NASDAQ was down substantially throughout the week. And so overall, taking a look back at what we were discussing on Tuesday, the 14th, after the core CPI report, I'm not going to bore you guys to death and read this entire thing, but we had mentioned that the CPI report came in much softer than expected, which gave the markets an encouraging sign that inflation had cooled more than forecast. And then I said down here at the bottom to wrap this up, overall, today's CPI report is a step in the right direction for risk assets, but the markets are far from out of the woods. PPI, Fed commentary, earnings season, and developments in the Middle East remain the primary catalyst that could determine whether today's optimism develops into a broader recovery or proves to be only a temporary relief rally. Now, fast forward to today, we are seeing that it was just a temporary relief rally. We are not out of the woods yet. So again, trying to keep you all level-headed, we're going to come over here to the fundamental update section inside the private CYPRX Discord. And this rising, this is what we were reminding and telling our team. During the Asia and London session trading hours, selling pressure continued across crypto and NASDAQ as the resilient U.S. data continued. Renewed Middle East tensions and fading optimism around the AI trade created an environment that remained unsupportive for aggressive risk-taking. Markets had been hoping for a fragile U.S.-Iran ceasefire and that it would develop into a broader peace agreement, but recent developments around the Strait of Hormuz and fresh Iranian attacks on the UAE have raised fears that the conflict may be entering another dangerous phase. With shipping through the strait still heavily restricted and global energy inventories being drawn down, traders are becoming increasingly concerned about the delayed impact of higher oil prices on inflation, economic growth, and corporate earnings. On top of that, we had technology and AI stocks remaining under pressure as investors took profits ahead of a massive earnings season coming up. Valuations have been outstretched, and the markets are beginning to question whether current demand for chips, memory, and AI infrastructure can continue if companies fail to deliver the profits and productivity investors have priced in. So, taking a look real fast, going over some updated levels. Again, we have been keeping you all in the loop with accurate updates on both XRP and Canton. These are the digital assets that we cover publicly for you all on YouTube. Sometimes we throw XLM in there as well. But again, if you all want access to these updated dark pools and deltas, we are the only retail community on the face of the internet that has access to this software. We pay thousands of dollars a month to keep this software running. If you guys want access to this institutional data, you have it on any given asset class or currency pair that you want to trade. So for example, XDC, deltas and dark pools, XLM, Bitcoin, HBAR, XRP, XLR, Solana, the list goes on. Our institutional software can gather these levels on any trading pair that exists out there that has valuable volume and liquidity that our software can track. With that being said, again, head over to CYPRXtrading.com. We'd love to have you on the team, giving you all a level playing field. Now you can see in real time. I believe our last update, we had mentioned that if we wanted to see higher prices on XRP, we needed to see the $1.11 dark pool turn into support, and we needed to see a $1.16 taken out. Now, fast forward to the end of the week, heading into the weekend, you can see the level of accuracy that we deliver here. No cap. These deltas and dark pools are the most accurate levels that retail traders have access to. You can see that we rejected the $1.11 range to the absolute pip. Buyers got trapped at the $1.11 threshold. Sellers were able to push price action straight back down into the $0.07943 dark pool, where prices currently trade at today. With that being said, heading into the weekend, we have Middle East tensions, of course, at the top of our minds heading into the weekend. Does Trump follow through with his threats on attacking Iranian civilian infrastructure? Do we see Iran escalate the situation and retaliate, so on and so forth? There's going to be so many things in the coming 2 days ahead before we head into next week that we need to be mindful of over the weekend. How does it affect oil prices? How does the market open Monday morning? Okay. And then fast forward into the coming weeks ahead, we have major earning seasons for AI tech related stocks and chipmaker stocks over the next couple of weeks, heading into the end of July. And then obviously, of course, we have multiple Fed speakers, core PCE, more inflation data that we're going to get, more labor market figures, so on and so forth. And so with that being said, if a risk off sentiment continues, also, I forgot to mention this. We need to keep in mind that there is still lingering in the background the possibility of currency interventions via the Japanese yen, which obviously, of course, depending on the strength of the yen, via those direct currency interventions, could result in massive FX volatility. At the end of the day, we still have to keep in the back of our minds that any yen carry trade unwinds would likely negatively affect the price of risk assets. And that is still a major catalyst lingering in the background that could decline the price of these digital assets much further than where we're currently trading at now. Something that I'm personally taking into consideration, my dollar cost average approach, where I'm still keeping some capital on the sidelines in case we do see a much deeper drop in digital asset prices, but I'm also taking advantage of discounted prices now for my dollar cost average portfolio and my long-term bags, as prices are still heavily discounted, right? So with that in mind, risk off environment first. If the risk off sentiment continues on XRP, I feel like we have literally been caught in this range. Now we are literally bouncing from $1.16 down to $1.03799 dark pool. With that in mind, the bearish catalyst first. If buyers continue to get trapped underneath of these dark pools and sellers continue to maintain control, right now I'm paying very close attention to this 50 EMA here that is currently holding price underneath of $1.11. So if buyers fail to make a formal attempt to break above that 50 EMA and sellers can keep price beneath $1.11, the first bearish scenario would be another formal attempt by buyers to break this high, a failed attempt at that matter, a break beneath $1.07, which would open the door for a revisitation of the base around $1.03 as our first and most immediate bearish targets. If buyers cannot defend $1.03799 and sellers manage to gain the upper hand, take prices beneath $1.03, retest $1.03 underneath of the dark pool, and hold buyers without allowing them to break higher, that is going to be a major case for concern of a much deeper drop on XRP's price. Again, that 91-cent dark pool is screaming my name. That is where I'm going to buy a very large portion of XRP. And obviously, of course, underneath of 91 cents, keeping on our radar that 68-cent dark pool to the downside as well. Far stretch away from where we're currently trading at right now, would require a major catalyst for us to get to that downside target, but nonetheless, still something that we are keeping on our radar. So first downside targets right now in a continued risk-off environment would be $1.03799. Second bearish target, if that level breaks, with sellers gaining control, trapping buyers, and keeping pressure on buyers and sell momentum picking up, would be the next target of 91 cents. In a bullish scenario, where if we do see a drop down into $1.03799 and buyers are able to make a formal attempt to defend, we could see price get pushed back up into the higher level at $1.11. That $11 threshold becomes the last line in the sand for sellers. We need to see buyers break that, breaking previous bearish structure, retesting that, and then that would be a case for a possible recovery back into $1.16, which will be the overarching bullish target that we need to see buyers break above if we are to see any higher prices on XRP as of right now. In an extreme bullish environment or a possible risk on flip, if we can break above $1.16 after reclaiming $1.07 and $1.11 and turn $1.16 into support, that will again open the door for a recovery back into $1.29 to $1.36 as our next upside targets. I'm sure that we will have an update sometime next week before that comes into fruition. I personally do not see a major surge in price like that in the coming days ahead, unless we see some formal major breakthrough in regulatory clarity or some major formal breakthrough in Middle East tensions de-escalating, with both sides agreeing to some formal term and condition that completely mitigates the current situation and risk-off environment. All right. So for now, downside targets $1.03 to 91 cents as our last line in the sand for buyers to defend before going lower. To the upside, we need to see support at $1.11 and $1.16 if we are to expect any higher prices on XRP. If we can see buyers reclaim those two levels, $1.29 and $1.36 become our most immediate upside targets. As for Canton, super excited about a further drop on Canton's price. Not going to lie, we have been waiting for these levels to come into fruition for some time. If you guys followed our last update, we had dollar cost average into Canton at the 12361 dark pool, where you can see we had a very nice bullish reaction. We had the DTCC tokenization event take place on Wednesday, July 15th, which didn't result in any major formal price action. You can see that we just respected the 50 EMA. We rejected the 13916 dark pool. Buyers got trapped at this level. And for now, sellers have been able to keep price suppressed beneath the dark pool at the 13916. With that being said, downside targets first. If we cannot see buyers hold at the 12361, turn it into support and start to make a formal push higher, that would open up the door for a case of concern. A break below the 12361, sellers retesting that level, holding buyers at that level, and continuing with the sell volume would open the door for a much deeper retracement down into the 11021 as our next institutional dark pool area of interest, where we will start to look for buying opportunities. Anything under the 11021 cent psychological level opens the door for a much deeper retracement down into the next dark pool beneath that at the 09453. These are going to be our two next areas of interest for buying opportunities on Canton, primarily because we just recently executed some buy positions at these 12361 levels. So prices are not going to be discounted again until trading beneath that dark pool. That for me opens up the door to dollar cost average in if we get another deeper retracement down into 11 to 9 cents. So bearish targets out of the way. Now, if buyers can hold a nice defense at the 12361, trapping sellers and starting to break previous bearish structure, we need to see 13916 reclaimed. As you can see, buyers were trapped here after previously acting as a support. Sellers were able to aggressively push beneath the dark pool at the 13916. Upon buyers testing the strength of these sellers in this area, sellers just threw up a passive defense, trapped buyers at the 13916, and have defended this area very nicely. With that being said, the only thing that would open up the door for further upside on Canton right now is a sustainable break above the 13916, engulfing the passive sellers that sit at this level, reclaiming that, turning it into support, which would open up the door for the next bullish target at the 15.6. If we can reclaim the 15.6, that would broaden a much further recovery on Canton, possibly opening up the door for a revisitation of that 17-cent passive seller that we know likes to sit there and has defended price for some time on Canton. So for now, that is the bullish upside on Canton. Obviously, of course, any sustainable break above 17 cents opens up the door for our higher targets. And if you've been watching us here at CYPRX, you know those higher targets come in anywhere between 19 to 29 cents. I'm sure that we will have an update before then. So with that in mind, right now, if buyers can start to defend the 12361, the first upside hurdle is going to come in at the 13916. The next hurdle to reclaim is going to be the 15.6, where I personally think we will have an update well before then. But just in case we can break above that 15.6, then 17 cents becomes the next hurdle to the upside. All right. That is it for the technical analysis updates. Again, just level to level accuracy, no overinflated hype. Hopefully, you guys have been paying attention to these updates rolling into the weekend. I will be coming into some travels here soon, so probably will not get another update from me in terms of these technical analysis levels until sometime next week, maybe Wednesday or Thursday. Keep that in mind just in case price moves. Check the Twitter. I will definitely update you guys over on the Twitter space via a cover of the fundamental and technical analysis backdrop like I usually do. So if you don't follow me on X, make sure that you guys go do so. That is it for the first portion of today's video breakdown.